Good morning, everyone, and welcome to the month of August. I have not been very active this weekend and yesterday for just private reasons, and the market was not very enticing either. Just low liquidity and not much going on. The market is in summer as well. But I thought it was a good idea to have a look at the situation right now, and I would like to look into the CME first to see where we stand. Let's go and see first the price action. This is our daily chart, the CME. This was the end of the week, so we managed to put a higher high. Now, this was yesterday and today. We are retesting the nine. I think it means pretty good sense. It's to be expected that once the nine crosses above the 21, the price comes down to retest it. So for me, this is a very normal pullback, which, by the way, sort of would coincide with the 618 if we come all the way to the 21. So for me, this is still looking, as we said, an upward move that will probably continue. And as we already said, but I'm going to reiterate it here, we have a target there. Look at this. For me, this is the target, the 12721414, which are between 26.2 and 27. This is a very good target. I wouldn't be surprised if we have the 1618 also tested, right? Which not only is a very important Fibonacci level, but it would come to close this gap that opened here on the 10th of June. So this is how we can see the upwards move. What would make me feel that this was it, this was a bull trap, and this is coming down? Well, definitely if we go to close below the last higher low, which stands at this level. We're going to mark it here. So it's beautiful coincides with the 382, and it is at 21, let's say 20.94. So this would be what we would look at for a clear, very definite invalidation of any move to the upside. These lines here that are coming from 2 years ago when we last were at these levels, these were important levels. This was an important level back then, so it seems to be a level that is being retested now. So for me, this price, if the price action remains here, this is really bullish. We can very well come to retest the 21 and the 618, so up to 22, that's fine. Any closing on a daily basis below these levels, then I think this is looking like a nasty bull trap. Let's see what other indicators tell us. Um, well, the stochastics is well positioned to continue. So this didn't really change, and we should close below 22.1 for it to come down, which could still happen and still be just a reset, a bullish type of reset. Um, and as we had said already several times, this is happening with volatility diminishing, which to me is talking about not a reversal, but more of relief type of upside. If what would make me feel that this is not an upside on a bear market, which we still are in, of course. Well, I would say if we manage to convincingly close above this area, basically if we close above 31.7, right? 31.7, 32, then because we could even come and revisit in a very bullish upside this area and still come down, right? So we would need a closing above these levels for me to feel that this is going to continue and it's not just a bull trap in any sense. Let me see what the weekly is telling us. Um, because what do we have? Let me just take all this away. Let's just have a look at the price action. Um, so we had our last high. We have had, yeah, this was our last high. A first low, a lower high, another low, huh, without a high, which was, remember, if I remember pretty clearly, waiting for a lower high, which never came, right? So this was continuation to the lows, which means that between this high and this low, we don't have a really good, nice intermediary lower high. Um, we will have to have some at 1.1, right? If it is above this, of course, it's going to be extremely high, right? But if we have managed to have some kind of lower high here, this will still be a lower high, and we probably will, and then I will have to, we will have to come back and reassess the situation, right? But there's a lot to happen before we feel this is definitely over and we can look for highs. I very much suspect this is going to take time, which is very constructive in a way, I think. I feel reassured if we go slowly. It gives you more opportunities. BTC doesn't do this type of things. Look at this, the past run. This is in March 20. We have this high here, so everybody was trying to see, is it going to be another lower high and then we go down. It didn't really happen. We just retested the 21. It took a few weeks. This is a few weeks, but it never went below. And then we just have a higher high and we shoot up with almost no correction but to the 9. So this is BTC at its very best, going up and up and up without giving you a chance to re-enter. The best chance was here, right, in terms of structure. So this is the weekly. Let's go back to the daily. Now, I wanted to very quickly have a look at the RSI, but as you can see, the RSI is just in the neutral zone, seems to be just trying to go up again, not very indicative of anything special move. Let's see the CME today on the 4 hour. So this is looking, confirming what the daily is telling us. So after this low, we had a higher low, another higher high, another higher low. And this past week, we've had our higher high. We may have a lower high, well, we are going to, because definitely we didn't continue from here. So we will have another low. Maybe if it will be in a constructive way, a higher low that may be here, maybe there. And I think when we look at the 4 hour, Of course, the validation would be at any closing below 20.9. That's like in the daily, right? But I think the 4 hour, for me, if we close, let's say, if we close below this area, I will feel that the upside is in danger. And to be clear, I would, for instance, close my long, which, by the way, I increased a little yesterday. I remember I entered at 22, right? And I increased it here. I would increase it a little more in this area. Not much, but just a little. But so far, so good. This is looking more positive than negative. I mean, more to the upside than to the downside. Remember, the market is extremely liquid. Most people, most traders, professionals are on vacation and things are very, volumes are low and therefore liquidity is low, which means that you can have a huge big move course just because of the numbers are lower, but it doesn't mean much. The 1 hour is telling us that a closing below 22.8 will bring the stochastics down, right? Um, this is going to happen in 40 minutes. So this is how I look at it today. The spot is following the CME, so that's why I'm going to end. I mean, just both move together, and I think CMEs often give us a better picture. So this is all I have to say. Thank you for listening, and catch up at the next one. Have a good day.